trading. Joining us this morning, Jason Calacanis is the CEO and founder of Inside.com. Jason, we were just wondering if we'd had a chance yet to ask you about your thoughts on Bitcoin. Have we?
Yeah, we've talked about it, and it's some great underlying technology in the cryptocurrency space that could be transformative for businesses and for individuals. However, I have not seen this type of enthusiasm from retail investors since the dot-com bubble and flipping houses. This is a very, tenuous situation we see right now with the SEC issuing a warning yesterday or the day before. And then last week, Coinbase, which is the #1 exchange for Bitcoin, and is kind of candidly a central point of failure, saying, if you invest in this, be prepared that our service will go down and you will not be able to sell your coins in the event, or sell them quickly in the event of, some kind of a rush on the currency either way. So this is very dangerous territory. I would advise people to be very careful, and it's certainly a bubble. The question is are we halfway to the bubble popping or 90% of the way to the bubble popping? The people in the industry are very concerned. The most intelligent people I know who were here since the start of the industry are saying it's a bubble, which means
so what does be very careful mean? Does it mean only buy a little bit? Does it mean buy a lot if you can afford to lose a lot?
Or don't mortgage your house.
Right.
Yeah, certainly you don't want to mortgage your house, and you don't want to buy Bitcoin on your credit card, which some people are doing. What you want to do is, if you really have an interest in this, try to have some information and learn about the space and maybe dabble with small amounts of money. So be very generous with your time and learning about cryptocurrency, but I would say less than 1% of your net worth at a maximum. If you want to explore this space, it's fine. But it is a very dangerous thing, and I get very concerned with contagion. We saw the last time what speculation did at the end of the housing boom and what speculation did at the end of the dot-com boom. And I don't think we're there yet, but we are in, what, a 105-month bull market, and you combine that with people making 100x and people's cab drivers and nannies and grandparents asking them about Bitcoin and how do I invest. And this movie, we've seen it before, and it does not end well.
All right, we're going to keep that. I thought you had a question, Morgan. Sorry, go ahead.
No, really, more than anything, I just had a comment, and that is the fact that Coinbase became the most popular app in the U.S. last week. It eclipsed searches, Bitcoin, for past the Kardashians in Google, and I think that really speaks to the point. The idea that there's contagion here, though, I have question marks about that.
Jason, we'll keep in touch with you on that one. The other big news today, of course, is Apple announcing a $390 million investment in Finisar, part of Apple's advanced manufacturing fund to support innovation by American manufacturers. Finisar will use the investment to build a plant in Texas where chips would be made to power iPhone features like Face ID. We also heard comments on Apple from billionaire investor Stanley Druckenmiller last night on Closing Bell. Take a listen.
Apple, I don't find nearly as exciting as, say, Amazon, Facebook, or Google. It's a hardware company. I understand they have an app platform, but...
You use their products? Do you consider them great products?
I do think they're great products, but they're probably no better than Samsung's, but they have a great brand. I just think, I don't see the under-earning that I see in these other companies. If anything, they're probably over-earning in terms of the margin they're making. So I don't own that one. I'm also not short it.
Some provocative comments from Druckenmiller. Jason, your take?
Yeah, it's a little bit confounding. I mean, we sit here and we ask technology companies to have profits and to not do what Amazon did and show no profits for decades. And here you have Apple being a money-printing machine, and they are continuing to expand how much money they make on these devices and how much they charge for them. So there is this existential risk of what comes after the iPhone, with the iPhone being over half their revenue, obviously. But the question that we had for the last couple of years was, would there be a margin compression here with Apple and Samsung, as we heard the gentleman say? And that hasn't happened. In fact, the opposite has happened. Now people are buying $1,000, $1,100 phones. And in terms of the app business, which he kind of, disregards there, that's a $32 billion a year business to services business for Apple. And that's a high margin business.
It kind of sounded like he just stepped out of the DeLorean, right? That was an argument from 5 years ago. Samsung's just as good. We expect Apple's margins to go down. They're on their way up.
Yeah, so I understand that it's not the most exciting company, and they haven't done M&A in a major way, which is confounding given their cash position. But I feel like the end of the iPhone is something that we've all been predicting, and the end of the iPhone profit machine is something we've all been wondering when that's going to end, and it hasn't. And so that, to me, is encouraging for Apple's future. You can't bet against this company.
But hasn't Samsung been taking market share from Apple in terms of smartphones and its newer launches of smartphones?
Yeah. So here's the nuance to that issue. While you may have market share in terms of the number of phones, there is no margin, there's no profitability in Android phones. It's a race to the bottom. So Apple has figured out how to make massive profits, and people who own Apple phones, they just generally don't give them up, even when the hardware from other manufacturers is better. And that's the big lesson for everybody in the technology industry, is that sometimes the ecosystem and the brand and the elegance of the UI can actually trump the raw performance and a 20% discount on price. I mean, you can get an Android phone for 20 or 30% less. That's more powerful than the last iPhone, yet people don't do it. Why? Because it's an inconsequential amount of money. An extra $100 or $200 for an iPhone versus an Android, if you use the phone for 2 years, it's 50 cents a day or less, 25 cents a day. It's inconsequential. And so Amazon and Facebook and Google are exciting companies. Sure, they have a wider range of products, but nobody has built a money printing machine like Apple, and it's something to be lauded and appreciated. And who knows, these AR glasses that they're working on supposedly, I think that does actually have the ability to do what the watch didn't, which is provide a wearable that's essential.
Well, that's a longer story we're going to have to watch, but clearly the amount of time spent means it's not hard to amortize your additional incremental cost if you decide to stick with the Apple brand. Finally, Jason, David Faber reports today that the Disney-Fox deal is expected to come down tomorrow, and according to sources, enterprise assets could be around $60 billion. Fox shareholders would keep about 25% of the new Disney. We've had a lot of discussions this morning about what scale actually means in this day and age, implications for Hulu, for the remaining company, and what happens to them after the fact, management. I mean, what's going to be your big question?
Yeah, so for me, it's how quickly can they ramp up subscribers to their direct-to-consumer platform, and then what original IP they make on that platform. Because if we look, Netflix obviously has shown the world that a very low-cost $8, $9, $10 entry fee is something that people can easily afford, and they'll sample, and they'll get tremendous value from. I heard a guest earlier today on CNBC say it's the best deal in media, and he's not wrong. It is the best deal in media. And a Disney over-the-top service directly to you, combined with the sort of Netflix features, is going to be a huge, huge winner. So how quickly they can roll that out and what original IP they can create to pull people over to it, it's a hits-based business. So if they do an X-Men TV series and it's only available, and obviously that's a franchise that is owned by Fox, if they have that franchise in a direct-to-consumer product, I think they're going to win big. The one caveat
Jason,
in all of this is... Yeah.
I know that you have been bullish Netflix and talking about the grand plan for Disney and all this, but, last night I just showed my sons the Captain America movie for the first time. I ended up having to pay for it because I didn't have it on any streaming service I subscribed to, and I'm thinking, boy, when Disney gets a streaming service, it's potentially huge. Isn't there really a threat to Netflix in there? Somewhere, because a lot of the movies people want to watch are somewhere tied up in this deal. And if you got to cut one service, and if you don't watch Stranger Things, maybe it ends up being Netflix.
It's a good point, but I think the thing that'll be different this time is we're all used to having one TV provider, DirecTV, Comcast, Time Warner, whatever it happens to be. And I think what we're going to be living in a world of is people having 5, 6, 7 accounts for $8 a month each, and you only have to be in the top 2 or 3 to have a gigantic business. So I think there'll be actually 4 of these services that have 100 million plus subscribers, and that'll be, the HBO, Hulu, Disney, Netflix, and who knows who else will get there, maybe DirecTV or YouTube. But multiple winners in the winner's circle for this one, and Disney will be either number 1 or number 2. They could even eclipse Netflix. I know that sounds crazy to say right now, but if we look at it with a 10-year arc, it's completely possible they'll catch up. I think it's probable they'll catch up, and it's possible that they could edge them out.
Yeah, that would that be one of the most amazing go-ahead runs in corporate history. We're going to have to wait and see what happens there. Jason.